One of the things I wanted to point you in the right direction on this year going forward, if you set your New Year's resolution, I think that's great. What I think everybody should really start focusing on going forward is looking at assets which are protected from creditors. And by that I mean your retirement plans or your life insurance. I don't know if a lot of people know this, but life insurance, or the cash surrender value of a life insurance policy, is a protected asset in the state of Florida. Now, I'm not talking about somebody who dumps a bunch of money into a cash surrender just to protect it from their creditors. Not that at all. Life insurance, as crazy as it sounds, is an important thing. So what I'm talking about is when you're setting up a financial plan, and the reason I say you need to set up a financial plan, I don't care if your plan is going to be something as simple as saving 5% of your income in a savings account, or if your plan is going to be much more diversified and you have this, and this. What I'm talking about is everybody's going to need some form of life insurance to protect themselves. Now, some people like term policies. Some people like building equity in their cash, building equity by cash surrender value in a whole life policy. I think it's important that people know whatever you choose to decide on, you've got to take into consideration always creditor protection. You never know what's going to happen in the future, and therefore you need to protect yourself now. When I talk about financial planning, I'm saying start saving money for your future, because I don't know what this federal government's going to do, and there's nothing the states are going to do to protect you. So you've got to start looking out for numero uno, number one, yourself. How do you do that? Everybody has the ability in this country to set up an individual retirement account. I say everybody. Anybody who's working. You can set up an individual retirement account. I'm not talking about people who are in their 80s or 90s. There's really no benefit to you. Nothing personal, but there's not. So let's say, for example, let's use a 25-year-old person. They're out in the workforce. They have no retirement plan. Their company doesn't offer one. Why not go down to your local investment house, and it could be T. Rowe Price. It could be Ameriprise. It could be anybody. Who's the other one? Talk to Chuck. Charles. But anyway, what you're looking to do is create a vehicle for you to save money, whether it be an IRA or Roth IRA or something. Start putting money away. Why do I say that? Because the money in your retirement plan under Florida law and under federal law is going to be protected, meaning that a creditor can never, ever touch it unless the laws change, which I highly doubt they'll ever change, so that they can go after your retirement savings. You start building equity in your retirement plan, and you used the best thing that I've ever heard of, compound interest, to your advantage. Now, of course, there's risks involved, and I'm not here to talk about that and your investment choices. What I'm saying is you need to start putting that money away without fear of, everybody ever going after it. If you default on a car and your car gets repossessed, you know that those monies are protected. Why am I talking about this today? Because, folks, I see people on a daily basis and on a regular basis who've tapped into their retirement plans to pay their creditors. That's a bad financial plan. And again, I'm not here to criticize anybody. I know everybody wants to pay their bills. I'm really not here to do that. What I am saying is, before you tap into those retirement plans, you should know they're 100% protected. I've talked to folks who've taken $250,000 out of their retirement plans. They get penalized, they got to pay income tax on it, and then they use that money to pay their creditors, and they have nothing left for their retirement, the stuff that they work so hard for. There's no right or wrong in this game. I'm not here to say this is what you should do, this is what you could do. What I'm here to say is I really want you to have a plan and think about it before you make any decisions. Get all the information available. I want you to have that option to use that money if you need it. I want you to have it there for retirement when you need it, because when you get to retirement, you want to have as much put away as possible. Again, you never know what's going to happen. Why do I want you to have a financial plan? Because it focuses you on one thing that's really important and probably lacking. When you start your plan, it could be as little as I said, as putting 5% of your income away. Fantastic. You started. Once you start that snowball rolling, though, then you're looking for other avenues. Maybe you could save money in a health savings account. Maybe your company's matching 3% in your 401k, and you're not taking advantage of it. I would say, why not? 3% of your income is not going to kill anybody. It may force you to cut back. It may say, oh, no Starbucks this week, but you know what? That's okay. A little bit of sacrifice now goes a long way. I really try to impress this to people I work with so that they have some nest egg put away for themselves at the end of the day. We have some people who are aggressive and they're going to retire multimillionaires. Fantastic for them. I have other people who are not as aggressive, and that's a little concerning to me. I worry about those people. I worry about everybody who comes into my office because I don't want them to come back to me one day and they're 70 years old and say, well, I have nothing. That would kill me. That would hurt me. That would really, really bother me because there's a plan out there. You could take advantage of it. So I'm not preaching. I just want everybody to have a financial plan. There's some really good books out there about how to get these accounts started. I like them because they're protected from creditors. Naturally, you know what I do for a living. I want to help you save your money, protect it from creditors' claims, just in case one of the worst things could happen out there. You get sick, you go to the doctor, you don't have health insurance, you got creditors calling you because the doctors aren't, they don't hold their receivables anymore. You can't pay a doctor $100 a month or $15 a month. He can turn it over, or she can turn it over to a debt collector within 30 days. And bam, you got the debt collectors on you. Now they want to sue you and all this other stuff. What I'm saying is, pay it as you can afford to. If you can't afford to pay it, I don't want you to worry that somebody's going to swoop in and steal your IRA from you. It can't happen, so again, be careful out there.